There is a game that we play with policymakers. We know that inflation can boost growth, but only if it isn't expected. So if policymakers succeed in the difficult task of generating confidence in the value of a currency, they immediately have an incentive to abuse the confidence and increase the money supply. The key question then is, how can they credibly commit to low inflation? One option is to create an independent central bank. The policymakers say we give up control of inflation by handing over the keys to the printing press to unelected officials. If that's not enough to generate confidence, the monetary authority can fix the exchange rate with a benchmark currency or basket of currencies. This really ties their hands because they're forced to use interest rates to hit an exchange rate target and cannot use interest rates to manage the domestic economy. An even further step is for multiple countries to adopt the same currency. For this to work, it needs to be what economists refer to as an optimal currency area. This implies that there is reasonably large labour market flexibility and that the economies of the various countries have similar economic shocks. Alternatively, we can remove the temptation to increase the money supply by completely removing power from the government and adopting commodity money. This could be something like a gold standard, or it could be a cryptocurrency. Either way, policymakers' hands are completely tied. Ultimately, there's a trade-off between credibility and control. If policymakers want credibility, they have to give up control of the money supply. Historically, governments that retain control over the money supply can find it difficult to generate credibility.